Hey everyone, welcome back to FinTalks, and this is our weekly crypto market update for the week ending October 19, 2025. We're going to walk through the major price moves, key news and events that shook the markets, on-chain and sentiment data, and I'll share my speculative view for what could happen in the week ahead. None of this is financial advice, just my take. If you're new here, hit subscribe and ring the bell so you don't miss future updates. Let's start with the big players. Bitcoin, BTC, is trading around USD 106,900 as of October 19, 2025. Ethereum, ETH, is sitting near USD 3,290. Over the past week we saw some meaningful pullbacks. For instance, Bitcoin had dropped roughly 6% in midweek amid broader market concerns. Ethereum also fell around 7.8% during the week. For top altcoins, while I don't have exhaustive numbers for all, the overall tone was negative. Many altcoins underperformed, reflecting risk-off sentiment. We'll talk more about this soon. So in short, high-flying crypto moved from strength to caution this week. We're seeing the market decide to take a breath. Now, let's dive into the stories driving this action. Regulation and oversight. The Financial Stability Board, FSB, the G20's financial risk watchdog, issued a warning that global crypto regulation still has significant gaps. They flagged stablecoin regulation and cross-border issues in particular. That kind of commentary tends to raise caution. When regulators publicly highlight vulnerabilities, institutional players may step back or hedge. Scam hack security event, the US charged a Cambodian executive, Chen Ji, along with his company in a crypto fraud and money laundering case involving over USD 14 billion in Bitcoin. That underscores the ongoing risk in crypto. Big consequences when things go wrong. It can feed sentiment shifts, ETF and institutional interest. On the more positive side, global crypto ETFs attracted nearly USD 5.95 billion in the week ending October 4th, driven in large part by Bitcoin, USD 3.55 billion, and Ethereum, USD 1.48 billion. That shows institutional money is still flowing into crypto, so the structure of demand remains intact. Stablecoin incident, a partner of PayPal, namely Paxos, accidentally minted USD 300 trillion worth of PYUSD stablecoins in a technical error, though swiftly corrected. While this was fixed, it raises awareness around operational risks in the broader crypto ecosystem, so you have regulatory alarms plus operational risks rising, which tend to dampen the mood, but you also have institutional inflows still strong. That mixed dynamic is probably feeding the current consolidation in pullback. Let's look at the data behind the scenes. Sentiment. According to one model, the fear and greed index for Bitcoin was at 38, fear, around mid-October. That suggests the market is cautious, not extreme panic, but definitely not euphoria. Price technical. For Bitcoin, one dataset notes that it lost 3.60% in the last 30 days, and is trading below its 200-day moving average in one view, bearish medium term, even though the one-year trend remains positive. Liquidations. Leverage. One big story earlier in the week, October 10 to 11, was a massive liquidation event of around USD 19 billion in leverage positions, triggered by trade war fears and margin stress. A record-breaking wipeout occurred in the crypto space. More than $19 billion in leverage positions were liquidated. Whale, big money activity. There was also notable accumulation of certain smaller tokens by whales, but nothing in the public data this week showing major new accumulation in Bitcoin or Ethereum that I could track quickly, so we'll mark that as monitor. Summary of data takeaway. The market is showing signs of caution. Leveraged money got hit. Sentiment is wary. But underlying structural demand, institutional ETFs, is still present. That sets a backdrop of consolidation, rather than a full-blown crash or runaway bull run. Alright, here's where I share my outlook, clearly marked as speculative. If you're trading, please do your own research. Bull case scenario. If Bitcoin can hold USD 105,000 to 108,000 support and institutional inflows continue, we could see a relief bounce. A move toward USD 115,000 could be on the cards, especially if macro headlines turn favorable, e.g., no new tariffs, supportive regulation. In the altcoin space, a positive turn could result in some catch-up moves for large-cap alts, ETH, SOL, maybe some DeFi names. Base, most likely scenario. Given current sentiment and the flurry of risk events, I think we're in consolidation. Bitcoin trading range of USD 100,000 to 115,000 with occasional dips and rallies. Altcoins likely to underperform Bitcoin during this pause. Use this time to watch key levels rather than try to chase breakout. Bear case scenario. If we get a fresh negative macro regulatory headline, say more trade war escalation or a major hack, Bitcoin could test down toward USD 95,000 to 100,000. Altcoins could undercut further. A renewed deleveraging wave is possible. Key levels to watch. Support, USD 100,000 to 105,000 for BTC. Resistance, USD 115,000 to 120,000. Sentiment watch. If fear and greed drops below 30, a contrarian buying opportunity might emerge, but risk is higher. Again, none of this is guaranteed. Use stops, manage risk, and avoid excessive leverage. Thanks for watching this week's crypto market recap. If you found this useful, please hit the like button, subscribe if you're not yet, and ring that notification bell so you don't miss next week's update. Drop a comment below. What's your view for next week? Bounce, consolidation, or sell-off? Also let me know if you want a deeper dive into any altcoin, token theme, like AI crypto, DeFi, or L2s, and I'll try to cover it next time. Stay safe, stay informed, I'll see you next week.